Good morning, everyone. My name is Anne-Marie Band. Today is Thursday, July the 20th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're going to start with SPY today, and, I was waiting for a couple of moments to see if the jobs number would sort of filter out into the space, and not really, right? So what did we get? A lot of earnings, not really a ton, but a bit of earnings that weren't stellar, but not really something that makes you want to grab your blanket and go hide under the bed. So, it depends on who you're talking to. Of course, there are bad things in there. We're just kind of ignoring them. Okay, so let's get to the mechanical motion. First, up, up. Everything's still moving up. We're still in the area where every time that we've been here in the recent past, we have rolled over, okay? So recent past gives us probability of near-term future. And so we are expecting that this crest, no matter where it goes, is going to run into a lot of supply. We'll just see, right? But the top end is, 462. Today, we're looking at a chart that shows us a little bit of weakness, but traders really defending this line in the sand. Well, what line is it? The close of 3 days ago, right? Today, yesterday, day before yesterday. 3 days ago, remember, we always look at the current candle and the two prior candles. So this is going to be the area that says, you know what? If we get below there, buyers are going to step out of the way. And we're going to step into, maybe that 50% range. It kind of matches with the wick right there. So 452. And they'll give back just a little bit, right? We've got options expiry. We're very far away from the pins. It's all kind of crazy sitting around in there. Market structure, a little bit weird, but don't even fret about that. Just say to yourself, okay, what do I want to trade? Do I want to trade long? Do I want to trade short? If you say, hey, I want to trade long, this is the region that you want to hawk, right? Does it hit this space, hold the low of yesterday for 53.69 or so, and then does it bounce? Once it bounces and holds above your 454.05, 454.10, you've got an established risk on the bottom. You can take the trade long, and remember, high, high, lower high, lower high, lower high. Don't expect it to turn around and jump. Take some profit at the top of the candlestick formation, and then raise your stop to break even and see if it grinds up. Now, in a region where the market goes sideways, 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 which may or may not be today, I have no idea, if you take profit and then move your stop to break even, you're probably going to get stopped out. But I don't know if the price action is going to be actually sideways today. I thought yesterday would be sideways, and it really moved up in a crazy way. So here we are looking at the edge. The more we lose it, the more likely it is that we're going to grind down to the next base. Don't just pick along and stare it down as it goes below. As soon as it loses this edge, you've got some place where you go, wait, I got to collapse my risk. So what does that mean? For me, it usually means getting out of the trade. I will wait for price action to flesh out where supply is, or demand is, and then move back into the trade. All right, so there we have it with SPY. We know the numbers. Just freeze the recording and you can see them. Take a look at the Qs. These guys really affected fairly significantly by what else is going on in the reports, right? Tesla, NVIDIA, Netflix, whomever else. So this is really what we're staring down here. Notice today's candlestick of yesterday, day before yesterday, it's wiped out all the motion there. So again, the buyer's going to have to say, listen, I got to defend this line. If I can't defend 381, I'm going to step to the side and wait for the next value event down here at 378, 379. Listen, it could retrace this entire thing because this is a breakout, right? This is how a market should move. And if it's moving along the pattern, we should give all of this back up and this should end the week red. Okay, that's what if the pattern is the same, right? I'm a patterns girl. That's why I became a statistician. I love digging up for patterns. And so that's really what we look at. So there you have it. Line in the sand. It holds it. If you want to scalp the long sitting off of these edges, you know what you have to do. You have to, one, go to a tight time frame and say, have I stopped heading lower? Have I breached my resistance? And have I pulled back into a higher low? And then you can jump in, and you can do that on a 2-minute chart. All right, let's take a look at the ES. Running through the trades very, very quickly. The ES had a bullish day yesterday. And now pulling in, it's below the close and open of the 2 prior candles. So to me, this is evidence of, sorry, if you hear my voice tapering, I'm in a couple of trades. To me, this is a breakdown of motion, right? Now, you might say to yourself, wait, where does this breakdown begin? Listen, the moment that I get underneath in the overnight, underneath the close of the prior day, that's when my weakness begins to show up. Okay, and so my thought was, as I posted in the room, I said, hey, you want to watch for this motion to come down, push forward, and fail to recover 45.94. That's exactly what it did in the overnight. So we are in a continued downside pressure event, in my mind, in this chart. And so I'm looking for this wick, maybe 45.66, but we'll see how the buyers go. Inventory is very short overnight, and they are going to want to cover because they've had their faces ripped off every single time they've tried to go short, right? And that's the short seller. So they are going to be buying to cover very, very quickly. Here's what we're looking at in the Qs. I am going to remove this fib sequence. And so here's what we're seeing. Below the open of 2 days prior, again, they have to defend this area, but notice, day before yesterday, the weakness. Last night, continuation of the weakness. You can always use this line in the sand at 15,951 as the region where you go, you know what? If it loses that area, I'm going to start stalking the shorts. Okay? So let's see how much power the short sellers decide they're going to put into the market to buy, or the traders who've been buying the dip. Let's see what happens, right? I'm not going to touch this with a 10-foot pole until something breaks and says to me, wait, this is not what we're looking for, and I can take the short into the continued breakdown. My suspicion is that really we're in rotation and we should come all the way back down to 15,492. All right, last thing I want to look at is oil. Oil, up here at the top, but again, this was my thought yesterday. Hey, listen, watch these edges to become resistance so that we come back into the floor. Now, what it did 2 days ago, is come into this support area and bounce, and now we're sitting here where the buyers clearly look like they're defending 75. It was a long at 75 all day. So now that we're up here, the question now is, do we have enough supply to force price action down? There's a big story brewing here. We'll see what happens. It is sideways so far, but pressure is upward on the daily. I think it's going to come back to retest these zones, but the market is telling me, hey, I retested those zones 2 weeks ago. and this week. So what else are you looking for? So it might force itself to the north if you're thinking about taking a short here. If it gets up over 76.10, don't do it. All right, that's it for me. I'll see you all tomorrow.